Now, 11 minutes past 6. At midnight tonight, the Tokyo market opens, and many traders will be worrying whether the recent chaos in the markets will improve. On Friday, the FTSE lost almost 4% of its value. Well, what should small investors be thinking of doing? Let's speak to Robin Amlôt, editor of moneyextra.com. Very good morning to you.
Good morning.
What should investors be doing now? Trying to get rid of stuff or holding steady like we're usually told?
I think the first thing people should do is not to panic. It's not in anybody's interest to panic, and of course none of the city commentators are running around like headless chickens, although you can discern a certain febrile tension in what people have been saying. Certainly I wouldn't expect everybody to rush out and sell on Monday morning. That's the daft thing to do. We're always told buy low, sell high. Yet all the time private investors fall into the trap of doing it the other way around. They buy high and then they sell low. What's happened in the markets is a significant correction, and it's got everybody nervous. And of course, if you hold shares, you're actually going to be a little bit poorer than you were, but it's not necessarily time to panic yet.
And a lot of us might not think that we hold shares, but of course if we're investing in a pension, that pension may be affected as well, mightn't it?
Your pension has almost certainly been affected, because whether you invest in shares directly yourself or not, the money you put in your pension certainly will find its way onto the stock market. Anybody who is in a position of being about to retire might find their pension pot is a little bit smaller than it was as a result of what's happened. And certainly, of course, it will also affect the pension schemes of all the major companies, because they also find their way onto the stock market. That's more problems stored up for the future.
What about interest rates? Is there a chance that this may affect the interest rates that we pay on the money that we're borrowing?
It certainly could, but actually in a way that might make life a little bit easier for some of us, because of course what the Bank of England's been trying to do more or less over the last year, because interest rates started going up last August, is they've been trying to take liquidity out of the system. They've been trying to slow the economy down. And if you wipe £75 billion off the value of shares in 2 days, which is what happened on Thursday and Friday, then you have taken an awful lot of liquidity out of the system. You've taken a lot of heat out of the market. Things like the housing market will be affected. Obviously, at the top end of the housing market, you've got the city traders won't be getting quite such big bonuses after what's happened in the last few days as they might have done earlier in the year. So the housing market already slowing down, heat taken out of it at the top. The prospect of another rise in interest rates hasn't entirely gone away, but it's lessened, if I can put it that way.
OK. Robin Amlôt from moneyextra.com. Thanks very much for coming in this morning.